Welcome back. It's time now to take a look at what's making the business headlines. In our top story, Dubai's gold trade grew 18% in 2010 from the previous year to $41.3 billion. Meanwhile, a recent study found that the number of gold contracts rose by 39% year-on-year as of May this year. According to the study, which was initiated by the Dubai Chamber of Commerce and Industry and issued by the Dubai Gold and Commodities Exchange, there were 1,100 jewelry trading companies, 7 gold and precious metal manufacturers, and 3 gold refineries in Dubai. The gold market overview for the UAE last year showed that the most important export markets were Malaysia, Turkey, and Nepal for semi-manufactured gold, while Switzerland, the UK, and Singapore were the main markets for gold jewelry. In terms of imports, major source markets included Turkey and Kyrgyzstan for gold and semi-manufactured gold. The UAE was the Arab region's top market for goods in 2010, according to statistics released by Kuwaiti-based Inter-Arab Investments Guarantee Corporation. According to a study, the Emirates is the world's 25th largest importer of goods and services and the world's 19th largest exporter. However, in the Gulf region, the UAE is the #1 top market for goods, and on top of that, the only Arab nation to be among the top 30 global markets. The country accounted for over 1% of the world's total imports, worth $15 trillion, and 1.5% of global exports, worth $15.2 trillion. Oil-producing companies in the Gulf region have pumped more than $73 billion into chemical projects. That's according to press reports based on data released by the Gulf Organization for Industrial Consulting. This comes as oil producers try to expand their operating base and ease reliance on crude exports. Saudi Arabia, the world's largest oil exporter, is the GCC's region's largest chemicals investor, with investments amounting to $51 billion. That is 70% of the GCC's total petrochemicals investments of $73 billion. UAE-based oil producers invested $2 billion into the chemical sector. And let's now take a look at the local and regional stock markets. The UAE's as well as the GCC's main benchmarks ended mixed today. And in our world business news, the clock is ticking over in the US as President Barack Obama and lawmakers continue to mull over ways to lift the $14.3 trillion debt ceiling by August 2nd to prevent a default, which most likely would force the US into recession. The president stated that he wanted to hear from congressional leaders by the weekend. However, Republicans made no announcement, according to Reuters. They want a deficit-cutting deal in order to raise the debt limit. However, the Democrats want tax increases on wealthy Americans. Republicans reject that. As the two sides won't give in, the consequences of not reaching a debt deal are looming. Ratings agency Moody's and Standard & Poor's signaled they may cut the US AAA rating if the borrowing limit is not raised. In his weekly radio and internet address, Obama stated that the US can't solve its deficit issue without curbing federal spending.
I wouldn't agree to some of these cuts if we were in a better fiscal situation. But we're not. That's why I'm willing to compromise. I'm willing to do what it takes to solve this problem, even if it's not politically popular. And I expect leaders in Congress to show that same willingness to compromise. So I've put things on the table that are important to me and to Democrats, and I expect Republican leaders to do the same.
Raising concern over the export market, India's Commerce Secretary Rahul Kular on Saturday said export growth would go down by 20% due to a slowdown in the global economy. During the first quarter, however, exports rose by 46% to $79 billion, while imports went up by 36% to $111 billion, resulting in a trade deficit of nearly $32 billion. Kular said the strong export growth of the past few months cannot be sustained for a long period of time. However, he expressed satisfaction that it would not turn negative. Kular further stated that the growth rate would not go below 20%, with some sectors like engineering doing extremely well.
Those of you who are in certain sectors, clearly you will have 20+ percent growth. depending on which sector you're in. Engineering is doing extremely well, and that is metals, non-ferrous metals, iron and steel, autos, auto components, that entire range.
Following last week's split of Sudan in a northern and southern part, the country's central bank in the north said it would begin circulating a new currency at the end of this month, after South Sudan said it planned to create a currency of its own. South Sudan, which declared independence on July 9th, said on Monday it would begin circulating its previously announced South Sudan pound in the coming week, pegging it 1-to-1 with Sudan's existing pound. Meanwhile, Northern Sudan's central bank governor said the North's new currency would go into circulation before the end of this month. He added that the full replacement of the currency would take 2 to 3 months. Before we go, here's a quick overview of the oil and currency markets, and after that, Laura Buckwell is back with the day's sports news.